We're here to talk about evolving global economic landscapes and basically how this fits into the overarching theme of the day, which is digital trade. So I wanted to start by just asking you, what role do you see digital technologies playing in facilitating global trade?
Well, thank you. First of all, let me thank the audience and say it's so nice to be so warmly welcomed. Actually, it's very humbling, and I see some wonderful familiar faces. I won't say their names. But digital trade is probably one of the most exciting aspects of trade that is going on. So digital technologies is something really vital that I think the continent, I would say the young people have caught on to it, so we're not as behind as people think. Young people are actually quite comfortable and doing a lot of things digitally, but digital trade is the fastest growing segment of trade, and digitally delivered services trade, which is all the things that are traded. People don't realize they are trading when they're, selling entertainment on the internet, when they're offering services remotely, be it medical services, accounting services, education services. All these things are digitally delivered trade. It's growing at 8% per year compared to goods trade, which is growing much slower at about 4.6%, and other services trade. So it's very exciting. That's where the future is at.
And I mean, obviously the excitement in the room is palpable. You clearly are excited about this, but obviously there are challenges with all of these things. And one big challenge we see with trade is protectionism and the rise of protectionism. So what challenges do you think protectionism poses to global trade? Well,
protectionism leads to fragmentation of trade. But before that, I think our biggest challenge on the continent with digital trade is infrastructure and regulatory frameworks, bigger than protectionism. Just one fact, this trade we're talking about, digitally delivered services trade, where I think we have an enormous opportunity because we are so talented on the continent with the creative sector. This trade is worth $4.25 trillion now. And Africa has only 0.9% of it. But it's growing very fast in many countries on the continent. And I think it could grow faster if we were able to bridge the digital divide in many of our countries and establish the right regulatory framework. So I just wanted to put that on the table. But of course, if we have protectionism, if we have a fragmented approach to governing digital trade, it's going to make it very costly. We've actually done some work at the WTO that shows that if the way we manage data flows in the world, because digital trade is also about not only flow of goods but data, if we manage it in a fragmented fashion, each having its own way or blocks of countries having their own way and not a holistic approach, it could lead to almost a 1% loss in global GDP in the longer term. And it would be bigger losses for developing countries. So you're absolutely right that we need to find a cooperative approach forward.
And just to take you back to the first point you raised, which is a very valid point in terms of developing the infrastructure, well, what needs to happen? How can we overcome that challenge and develop the infrastructure that's needed on the continent?
There are two types of infrastructure. There's the physical, where many of us are not connected. I think young people are much more connected. I think 44% or more have access to the internet and do everything on it. Some of them have never even entered a bank or written a check. Everything is digital. But there are large swathes of the population. We don't have access to electricity to begin with. So it's as basic as that. And then to telecommunications connections. So those two things have to change. And more than 55% of our population does not have access to electricity. And those who are in rural areas or secondary towns and have less access. Even sometimes in our larger cities, we don't have that good access. So fixing that, if we really want to be digitally on, And then improving our telecommunications those are the two things. But we now have cheaper systems of satellites, but you've got to have electricity. So how do we focus on improving access to that? Then there's a second type of infrastructure, which you can call the software or the soft infra, which is our regulatory systems. Mm-hmm. You know, many of our countries don't have the right regulations to govern the way we trade or, you know, digitally or digital access. We just don't. Some do, 1 or 2 countries. My country, Nigeria,
Ghanaian.
Nigeria's regulatory framework is reasonably good, and we have a minister now who's quite versed. So I think we'll get it right. And so some other countries, Kenya and so on, we can name several that are doing well. Rwanda, obviously, is way ahead. But we have many countries whose regulatory frameworks are not in place. So we also need to solve that. And if you don't solve all these problems, access becomes an issue. Now, at the WTO, we've actually taken this on. We're not a financing agency. We have some money, but not like the World Bank or the IMF. But we have money for support to build technical capacity. So what we did is to enter into a partnership with the World Bank's Africa region. Mm-hmm. And we are working in 10 countries now. We have to try and help with the digital divide with the World Bank, if they can try to help with the hard infrastructure. And then we come in and work with them on the regulatory framework, which is the soft infrastructure, and you need both.
Do you think there needs to be more joined up thinking in terms of regulatory frameworks across the continent?
I think so. I believe so. Anytime you can avoid regulatory fragmentation, it makes it easier for business to come in and not have in each and every country to look at a different way of approaching, a different way of doing business. So, and regulatory arbitrage. So I think, you know, more joined up thinking in that regard is also a good thing.
And how can that be integrated into the African Continental Free Trade Area? Because obviously that's something we looked forward to, has been heralded, but in terms of the way it's been rolled out, it's been quite slow. I mean, how can this be factored in?
Well, I want to be sympathetic to that. They actually have a digital, they're already working on it. Yep. And they have a digital segment that they've been, that countries have signed on to. So they're onto it, and I think it will be very congruent with the things we're trying to do at the World Trade Organization. I think they just need to go ahead, and the governments need to work with them to get this implemented. Yeah. Okay. So we're on it. It's always a bit slow to go from knowing what to do to implementing. Yeah. And we're trying to make sure that whatever we do from the global perspective aligns with what they're doing. And a lot of the things they do at the African Continental Free Trade, their protocols are also based on WTO protocols, but some of them are ahead, and which is good. I like that, yeah.
And obviously part of this discussion is about the global economic landscape, and a big part of that is, well, we've seen last week the Fed has started its rate cutting cycle. So I mean, what impact do you think that will have on global trade and specifically on emerging markets?
Well, you know, each time, I have to tell a bit of a story to get there. Of course, when you cut interest rates, it means that borrowing costs will also come down. And you know that we have a debt problem on the continent. More than, you know, a great number of our countries are seen as being in debt distress. Their debt to GDP ratios are higher than they should be. Debt service to revenue is eating up a lot of the revenue stream that they get, so they can't pay for health. It's not good if you're paying more to service debt than you're putting in your health and education budget, and that's happening in a lot of countries. So, and when the Fed raises interest rates, it also impacts what happens, you know, in our economies and emerging markets. You know, their borrowing costs rise, and so when they bring it down, it's also a good thing. So hopefully that will impact positively. Of course, it will depend country to country because the macroeconomic dynamics at the country level differs. from country to country. So even if the Fed cuts and your domestic issues are very severe, it doesn't automatically mean you have lower interest rates. But hopefully it will impact positively. For those who have borrowed externally, it will certainly impact positively in terms of borrowing costs coming down. And then with debt service being lower, they'll have more fiscal space to be able to finance other things. So I see it as going in the right direction. But we must look inward too to try to solve some of the fiscal and some of the monetary policy issues that have to be dealt with, the fiscal issues, inflation. Some aspects of that are more domestically driven than anything else.
Can you expand on that? Because, I mean, we have seen a number of different policies being rolled out in terms of an embracing of economic orthodoxy. We've seen in Nigeria a move to try to get rid of the subsidy. I don't know how successful that's been. In Kenya, same with subsidies. We saw that in Ethiopia, they floated the currency. Nigeria said it's going to float the currency as well. It has done. So we've seen what's happened with the Naira. So what terms of changes in terms of looking inwards are you looking for in terms of fiscal policy and monetary policy?
Well, you're asking an economist who believes that some of these measures are needed.
Yeah.
But it's the way you implement them. And when I was a finance minister, we did some of these reforms. And maybe it's the implementation, you need to look at the way. So as a former finance minister, I try not to comment too much because to hold my tongue. You've done your time, now keep quiet unless you're asked for information. But you're saying Africa-wide, there's absolutely no contest that we've got to get a stable macroeconomic environment in each country. You can't operate, you can't really grow, you can't have growth, you can't invest if you have an unstable situation. If your fiscal deficit is too high, your exchange rate is not being well managed, there's uncertainty, you don't have strong reserves, and I could go on and on. So you do have to deal with it. If inflation is too high, it's also biting on poor people. The ones who suffer most from inflation are the poor people because the costs of the daily goods they have to buy too high. So you need to get all those things under control. So yes, they need to stabilize the macroeconomy, but I think when you're doing these reforms, you need to do them within a medium-term context. So, and you need to show people you have a strategy and a medium-term plan so that the policies you're implementing are not seen as being scattered. They're within a framework. They've got to see what's the end result. At the end of the day, after I finish suffering, am I going to get something good? If I know that 3 years down the line, things will improve and I begin to see signs, then I can bear it. If I don't have any concept of where it's going or what the end result will be, then I'm not going to be patient.
Yeah.
So I think the way the reforms are presented, packaged, must be very clear. Then you must realize, you have to realize there are winners and losers. And when you have winners and losers, the winners may not even know they are winning. So you've got to communicate to them they are winning. Otherwise, they'll fight you, along with the losers. Yeah. And then the losers, you have to find a way to cushion the loss. So doing reforms requires a great deal of thinking and strategic planning and putting it together before you actually start. And it requires tremendous communication so people know it's all going somewhere and there's going to be a result at the end.
Dr. Ngozi, I could talk forever with you, but unfortunately we've run out of time.
That's
so
fine.
I just want to thank you so much. I know I've had...
Thank you.